Hello, everyone. I trust you're doing well. Appreciate the opportunity to share with you today a topic on developing the trading process or developing your trading process. One of the things I believe and teach is that there's no one way to trade. There's no perfect way to trade. There's no secret to trading, some secret indicator, chart pattern, something that's going to confirm for your ego that you're right each time. You've got to develop a process, and really, the process has got to be a focus on your mindset. And if you've got the proper mindset, then you can take any chart pattern, any edge, anything that's been traded for any length of time, and you can take those variables in that trading edge and make it your own. You may tweak it, you may do a few different things, but you need to make it your own and not simply try to mirror somebody else. And that's part of the process of learning how to trade, to find what works best for you, not what makes you a winner every time, but what works best for you as you understand the risk involved in trading and the uncertainty. So we're going to go through developing your trading process. We're going to look at specific chart examples for the process I use and I teach, and the variables there, and how you can tweak those variables to make it your own from the general understanding of my process. And I've been doing this for years. It's just the process that I've developed for myself. I've been trading about 15 years, and it's what makes sense to me. And it's an edge. It's based on a trading pattern along with my variables that have been in existence since the beginning of trading. And it continues to be a very viable process. The problem nowadays with so much access to books and online courses and social media and financial websites and financial television is that we're bombarded by different ways, either from a fundamental or technical perspective, to attempt to make money in the stock market. I mean, there's thousands of ways to do so, and that can be a problem because you can spend years investigating and chasing all of these different things and still not make any money. And eventually you'll find that it comes down to making it very simple, having a few variables in your edge, accepting the fact that some of them are going to work and some of them aren't, and work on the risk and work on managing what happens at the right hand side of the chart. That's what it boils down to. But because that takes a lot of focus, it takes discipline, it takes specific habits, it takes a lot of patience, which very few have. Very few succeed in this business. So for me, I believe that trading is 100% psychological. And then you take your psychology and you can start defining your edge from a technical standpoint. All right, let's take a look at developing your trading process. Foundation, first of all, upon which any trading process must be built upon. The mindset required to understand risk and accept uncertainty. You can argue with me all you want. There is nothing out there that's going to make you money 100% of the time. In fact, if you talk to traders who have been successful for any length of time, those that you see on financial programs, media, or someone that you know personally who has succeeded at trading over time, they will tell you that you can make money when you're only right 20 to 30% of the time. You must accept the uncertainty. You can trade the same chart pattern over and over and over again. It can make you money 20 times in a row, but it can turn around and lose you money 20 times in a row. It can make money once, next time lose, next time make. There's uncertainty involved that you must learn to manage. And I've learned to manage it by setting up a specific type of technical process using the charts that helps me manage also my emotions. Therefore, there is a random distribution of winners and losers on any given set of variables defined as an edge. In other words, when you develop an edge for trading, whatever it is you want to trade, when you finally found out that you've got to focus on something and you've got to be a specialist at a specific type of trading edge, you're going to do so by developing variables of that edge. And I've put together several that most people will use, most traders will use to define their edge. These are the variables. In other words, a chart pattern, historically tested and proven over time. Do you have something, some type of pattern, whether it's a candlestick pattern, a chart pattern, a indicator used with price that over time shows that there is a probability, a good probability that it will work, even though there will be randomness of when it will work. In other words, and this quote, this is basically a quote, random distribution of winners and losers, from Mark Douglas's book, Trading in the Zone. I recommend you read that. But we never know when a trade is going to work. Again, you can take the same trade every single time, head and shoulders pattern, or an engulfing candle pattern, or a MACD crossover pattern, or anything. Some of them will work, some of them won't. You're never going to know. But you know historically over time that there's an opportunity to make money with that edge, as long as you define where you're going to get out if it's not working, and how long you're going to stay in if it is working. You must understand general market conditions. One of the things we study is, where's the general market? Is it trending? Is it choppy in a box? Is it breaking out? Is it possibly developing a false breakout, reversing? General market conditions will help you find better opportunities on individual stock trades. Why do you think that is? Why do you think general market conditions matter? Yes, because most of your stocks will move in the general direction of the market. My trading edge, my main trading edge is trading breakouts in trends. If you're really honest with yourself, all of us want to trade trends, because if you get into a trade, you want it to trend in the direction of your position, whether up or down. So I trade breakouts and trends. Well, when the market's going through a choppy, volatile period like it has been for most of this year, and especially in the past couple of weeks, you'll find most breakouts will fail. That's because the general market's not breaking out. So understanding general market conditions is a variable that I use. Time frames employed. What time frame are you going to use? How many time frames are you going to use? Are you going to use one time frame? Or are you going to use two and one confirm, which is the next one? Is one time frame going to confirm the other? I like to use weekly and daily time frames, because I look for trades to last, for me, days, possibly weeks. I like to make big money on trades. I'm not a day trader. But you can use a time frame, a daily time frame, and an intraday time frame. What are you going to use? And do you need confirmation for that? If you've got a trade that triggers for you on a particular time frame, does it need to do something else? Does it need to have volume? Does it need to have a particular indicator also there? Okay. Stocks to trade. What stocks are you going to trade? I prefer to trade stocks that have at least 750,000 average volume and are optionable and have high open interest in options because I trade options. So are you going to trade the stock or are you going to trade the options? And I have a very simple rule on options. I pretty much trade options like I trade a stock. I'm going to trade in the money and way out in time. For those who understand options, you understand what I mean by that. I'm going to buy at least 3 months out, and I'm going to buy in the money because I'm trading it as if it's a stock, and I want it to move, and I want it to have time to move along trends. Because again, there's 20 to 30% of my trades that make all of my money. But the only way that can happen is if they're allowed to run and have plenty of time to run, particularly when you're trading options. Catalyst. What's known? What's a known event? Someone give me a known event that stocks have that you can trade ahead of that can cause that stock to have unusual movement and volatility. That's right, earnings. What else? Think about Apple, for instance. What does Apple have a couple of times a year? New product introductions. Well, I don't know if you've ever noticed, but Apple goes up for a few weeks into those announcements and then sells off afterwards. It's buy the event and sell the result. Yep, stock splits, a known stock split coming up, sales information for a stock, uh, whatever it may be. There are known events out there, investor conferences, for instance. Tesla, if you follow Tesla, the stock Tesla, they're starting to make announcements about new products too, just like Apple. So start paying attention to Tesla when they announce, hey, in 3 weeks we've got something we want to tell you, inform you about. Pay attention to it. Those are catalysts. Okay. Random distribution of your trading edge is next. Let's move this down a little bit. Because there is a random distribution, you never know when a trade's going to work, when it's not. You must predefine, and this must be a variable of your trading edge. You must first predefine your loss. Where are you going to get out of the trade if it doesn't work? Because we know that even if that edge that you trade has worked 8 times in a row, it's just like the toss of a coin. This time it may not work. Where are you going to get out? And you make that decision before you get into the trade. Here, we'll have a trade that will trigger, and we've automatically placed our loss lines. And as far as profits, what's your winner? How do you predefine a winner? Do you look at a winner as meeting or hitting a certain price area, such as a support or a resistance area, which is one of the things we discuss here: support, resistance within boxes, and trends along that support and resistance? Or do you just simply let it run and put a trailing stop in? How are you going to allow the big winners to take place that can make you most of your money? Because there's a random distribution. How many of you have gotten into a trade based on your edge? You got out of it because you just simply wanted to make enough money to make up for the last trade, and then you look at that stock a few days later and it went up and up and up, and if you were trading options, you might have made 15% on the option when you could have made 100%. How many of you have done that? Yeah, and a lot of it has to do with your emotions. A lot of it has to do with what's happened in your last trade. or last number of trades. It's all about psychology, you know. Here's the two stages you're going to go through once you've figured out that you can't predict the future. You need to stop chasing after all these different strategies and changing strategy from day to day and thinking there's some kind of secret technical thing out there that's going to make you money every time. When you stop chasing all these rabbits, as you know, he who chases multiple rabbits catches none. Once you're done with that, you're going to go through two phases. You're going to go through the phase of learning how to lose, and once you learn how to lose, I think what's even more difficult is having the patience to allow the winner to run. You know, no matter the variables of your trading process, the outcome of any given trade is never certain. Now, there will be those out there that's going to try to teach you and take your money in videos or courses or whatever. They're going to make you believe that there's something out there that's going to make you money all the time. Well, you'll eventually find out that they're wrong. I'd rather burst your bubble at the very beginning and have you understand that this takes work and skill, and the skill is learning how to take losses and letting the winners run, than me showing you. I can take the left hand side of the chart and show you 100 trades that worked and make you believe that they're all going to work, and then later you find out that I've just been lying the whole time. I'm just going to tell you up front. Okay. All right. To tell you up front that this is just the way it is. You're going to have to work on the random distribution of your trading edge and the mental aspect of it. Okay. So you need to have a chart pattern, historically tested and proven over time. Okay. So what I've done is, if you study any of the classic texts on trading and even newer ones, you'll find that there are those who have already historically tested patterns for us and proven to me anyway that the particular type of trading that I do, that I formulated and tweaked for myself, these variables over time work. They won't make money every time, but they give me an edge. Okay? Kirkpatrick and Dahlquist, I guess is how you pronounce her last name, Dahlquist. Um, they've written a book on technical analysis, which is really the textbook used for those who become chartered market technicians, the CMT program. And what they say in this book is, and they go through all different types of patterns and indicators, Elliott wave, Fibonacci, everything. And for me, I have no indicators. It's just price. And it works. It's simple. I keep it simple. Breakout trading is as old as technical analysis and likely the most successful. Trading the breakout is a powerful signal and the most profitable and reliable strategy when faced with a trading range or pattern. They've written a textbook used for you to get your chartered market technician designation. Thomas Bulkowski has written the books on chart patterns. He has literally taken all the chart patterns, run them through software programs, thousands and tens of thousands of trades over decades, and he has them listed and categorized, the ones that are the most successful and the most profitable over time. The trading patterns with the highest probability of success are trend continuation patterns such as flags and rectangles. A flag is simply another form of a box. where the price rests and then starts to run again. Same for rectangles. That's what we work on here. And that's what you're going to see in our chart examples today. Edwards and McGee. Anybody who's been trading the technical side, been studying technical analysis, you should have this book. Written, I believe, in the 1950s. It's the Bible of technical analysis. Everything written today on technical analysis as far as price patterns is based on Edwards and McGee. The reliability of continuation patterns such as rectangles and flags are undeniably proven in the charts and historically proven edge. All right, so here's the way we look at our edge. Dual chart trading edge. We look at trends and we look at breakouts in those trends, and you can look at charts. I can show you 100 of them, and you can see how the price action works. You're going to have trends in the market. You're going to have, during those trends, you're going to have periods where there's a rest in that trend. It goes sideways and then it continues. Well, we look at it from the weekly and the daily chart. Remember, one of your variables of your edge should be the time frames you choose to use and focus on. So here's, for instance, and we're going to see it in the charts. I'll show it to you and just share it with you in just a moment. We're going to look at recent examples of trades. We're going to look at past examples of how this is played out in the charts, and we're going to look at stocks that are currently on our watch list that we look for a trade. And every week we go through several hundred stocks. We'll go through them and discuss, hey, these are the ones that we need to put in the watch list because they're setting up our edge. You need to know, here's the other thing, if you've got a trading edge, you need to know what the price looks like before that edge triggers. And if you're really focused on a particular edge, you'll know what that price looks like for your setup. Okay, so, and here it is for us. Okay, number one, bullish bearish dual box break. Okay, dual chart trading edge. What this means is I use the daily and the weekly chart for a trade. I use the weekly chart basically as a direction chart. Here's the direction I'm going to trade. If it's trending up and breaking out, then I'm going to look for a daily chart trade to be trending up and breaking out in the same direction, bullish. Same for bearish. So I'm looking for the daily chart to confirm what the weekly chart is doing. And there's two ways. We'll have a weekly chart that's got a support and a resistance area. And that support and resistance area can form a box, or it can be along a trend or a pullback. And we'll look for the daily chart to break out of a resistance area at the same time that the weekly chart is breaking out. That's trade number one. And we're going to see several examples. Okay, so basically the weekly is confirming the daily along a trend and along our historically proven edge of breakouts in trends. Number two, confirmation box break. In other words, the weekly chart will be breaking out, but it may be extended when it breaks out. And we have our own understanding, and you should develop your own understanding of what is overbought and oversold, not listen to someone on TV or whatever. That's their idea of it. You need to develop your own idea. I have my own idea based on my edge. So if it's extended on the weekly chart, when it breaks out, I'll wait for a new box to develop on the daily chart and break out also along the same trend as the weekly. That's the second one. So number one is it breaks out of the weekly and the daily after a good rest at the same time. You'll see some examples in just a moment. The second one is We wait on the daily to break, confirming the breakout on the weekly. This one may take time. This one may take some patience. This one will take patience just for you to wait for it to break out on the weekly and the daily at the same time. All right, any questions so far? All right, let's go through some charts here, and you're going to see the weekly and daily chart listed here. Daily on the top, weekly on the bottom. Okay. Here are some examples of trade number one, and I'm going to label the charts for you. And this was a recent trade for us too, and I'll look at some a little bit further back. But take a look at Men's Warehouse. Okay. And I've placed on the chart the date that we really started seeing it either breaking out, extended, or not. Okay. So if you look at the weekly chart on Men's Warehouse, you can see here that we had a move up, then a pullback. We had some wicks in here. So we look at support, resistance, develop a box. You can either draw it here or here, it doesn't matter. The bottom doesn't matter at this point. We're looking for a breakout along the trend. And you can see that happened on the 17th, the week of the 17th. So you will see that it will also happen date-wise at the same time on this weekly chart happening on the daily chart. So if you take the daily chart, this is one that we actually discussed, triggered trades, and it was in our watch list. So you see at the same time it broke out of a box on the weekly and the daily chart. Along a trend. No, I do not. Okay. Do you actually placing the trade during the breakout or before? What's the amount of risk? Okay. All right. The amount of risk is going to be completely dependent upon you and how many trades you currently have, how much money you're willing to put into it, those types of things. The risk involved is going to be up to you. That can't be anything that I determine for you. Okay, but a good question. Okay, using VWAP, I've heard of that. I don't use it. Not saying that there's anything wrong with it. That is a variable of an edge, and there's 1,000 variables, and I just don't use it. Thank you for asking. So breaking out here, this is trade number one idea. We want to see it breaking out on the weekly and the daily at the same time along a trend. And then in this particular case, we were looking at it to possibly head up to a resistance level as a potential profit target, or you put a trailing stop in. Okay. Let's look at Apple. Okay, many people, most traders, like to trade Apple. Okay, now if you take a look at Apple on the weekly chart, and you're going to see a variation of both trades here, either waiting or taking the daily trade along with the weekly at the same time. Notice that Apple has been trending. Okay, actually before this past breakout, or the breakout here in April of last year, it was trending after breaking a downtrend. But it also developed a box. And I have a specific way of doing this, but here's support and resistance. Notice that it broke out of that resistance, this call it a flag pattern if you want, but broke out on 425. Okay. Well, it did it again. It ran. We studied stocks that run and then rest, run and then rest, and they will run and rest in different ways. But notice what we did here. Broke out here, broke out here, broke out here. Along what? A trend. Then we look for confirmation on the daily chart in one of two ways. You either take the trade when it breaks out on the weekly, if it's not extended, based on your understanding of extended, or you wait for it to set up a trade. So let's go back here at 425. Now, one of the things we do also is if there is a gap up breakout, I like to wait, and this is what I teach, for a continuation of the gap. So if I see the gap, then the next day it continues to run or it goes sideways, and we're going to see an example of one right now on our watch list that's gapped up and going sideways. Then wait for it to break. Sometimes they'll go ahead and break. There's a random distribution of how patterns play out. So Apple gapped up here. Earnings. I'm almost positive. Earnings here. End of April 2014. Okay, this was when we were started looking at it right here on the weekly. See that? So from this point forward, we will look for what type of trades? Bullish trades. Now you can either take the continuation or take a look at what's happened here. There will be. Thank you so much. Look at your pattern here. You can use that patience that I talked about earlier. Waited on it to go sideways after the breakout on the weekly. You wait for it to break out, pull back, flag, rectangle, whatever you want to call it, high probability trade since the beginning of trading, since the beginning of the stock market. Okay. Now I look at this as we talk about extended breakouts and want them to rest first, or ones that just have a nice sideways low volatility price action and then break. There's a science and there's an art. All right, let's go to the next one. Again on 10/24/14, you see we were breaking out on that weekly chart along the trend. Again, you can take the breakout when it happens. See the long box? Clearly defined support and resistance areas. You can take it then, or you can wait for it to pull back, form a new box, and then take it. Either way, or maybe you got into this one, put a trailing stop in, hit your trailing stop, broke out again, you took another trade. Let's look at the next one. In this case, you didn't have to wait. Notice what happened with Apple here. See the resistance, 119.92, that formed the last time it moved and then sold off? Well, it broke out on the weekly, and look at what it did at the same time. Remember, there's two types of trades. Breaking out at the same time, or you wait on it on Apple, and here is your trend. All right, let's take a look at BA. Again, this one's going to have both examples of you either wait on it on the daily or you get in at the same time that it breaks out, depending upon how the price sets up. Okay, so take a look at Boeing back here at 9/13/13. Okay, what did it do? It had we could go all the way back to the beginning of 2013 too. But look at what we had back here. We had a box break, rest. We call it run, rest, run. Rested and then did what? Broke out 9/13. See that? Now over here, you've got a long sideways box. See, they're all different. Some of them are going to just be long boxes. Others of them are just going to be kind of like flags, pullbacks. You never know. Okay. Random distribution of these patterns. 913. So here's 913. It's pretty much breaking out on the daily at the same time here. It's actually ran a little bit, so that might have been too extended for you. You're like, well, you know, it's already ran several days. I think I'll wait for it to pull back and give me another opportunity. Well, look when it did that. No, I do not. Take a look. And then it broke out here. Patiently in your watch list, like we have watch list stocks, in your watch list, waiting on it to confirm and continue the trend that's on the weekly chart. There you go. All right. And then January of this year. Let's take a look. Here's one where we broke out on the weekly. And what we like to see is we like to see it rest right below the breakout level. You know, and we've developed a breakout level based on past price action. And it breaks out on the weekly at the same time it breaks out on the daily. Okay? So this is an example again of one that breaks out at the same time on the weekly as it does on the daily. Very good question, Carlos. Carlos asked, are tighter boxes better regarding risk reward setups? That again, some tight boxes are going to work great, some won't. Some loose boxes, wide boxes are going to work great, some won't. You never know. I will say this, Carlos. Thomas Bolkowski says, when looking at flags, high tight flags work almost 100% of the time. He's got to say almost because there's going to be some that won't, but it's one of the highest probability trades. That means you have a long run, it goes sideways in a tight price action, and then runs again. You know? No, John. Is there a statistical edge that you know of placing your stop intraday? No. Have no idea. Okay. And I think we're going to see, yes, Andy, we're going to see another high tight flag here in a moment too. Take a look at CBG. Okay. All right. So there's your trade on Boeing. All right. How about BIIB? BIIB. Edwards and McGee, sir, was the old one. Edwards and McGee. You can buy it on Amazon used. I got a used copy. It'll work just fine. Look at BIIB on 130. Notice what it did. It broke out here after a resistance level and a box. Formed a box on the weekly and broke out. 130.15. Let's place it here. 130.15. Here was your gap up. You can either trade the gap or you wait for it to develop a sideways action and then break out of that sideways action, which it did. All right, here's some examples. Here's a recent one of trade number 2. Trade number 2 is where you have a breakout of the weekly chart and then you decide to wait Could be a few days, could be a few weeks. You wait for a corresponding trade on the daily. Well, this one broke out, HDS. You say, well, I want to wait for the daily chart to confirm with its own box and pull back. Here you go. This was actually a recent trade we did here. Already out due to hitting a trailing stop that we place. Don't have time here to go through how we do trailing stops and lost lines and letting them run and those types of things. But HDS. Nike. Take a look at Nike. Nike broke out September 2014, broke out of a nice long box. In fact, in that box it started trending higher from the bottom to the top. Now if you take a look, when that happened, you could have taken that trade. It did nothing. You could have waited till after earnings. I'm one who doesn't trade through earnings. If I know earnings are coming up, I don't trade through them. I think it's a gamble. Too big a gamble. It's not worth the risk. Okay? So you wait on it. Too close to earnings for me in here anyway. You wait on it, gaps up. There's no continuation, breakout here above that wick. You wait for it to pull back. What does it do? Forms a nice box. There's your resistance, there's your support, and then it does what? Breaks out. Oftentimes what you'll find with this type of trade is on that weekly chart, on that breakout, you may want to see it come back and test the breakout on that weekly chart. And that test on that weekly chart is what's forming the box on the daily. Came back, tested, and continued higher. Amgen. 8/1/2014, look, formed a nice box here. Box had been in existence since October of the previous year. Sometimes the boxes last days to weeks, sometimes they last months. 8/1/2014. Gap up, didn't confirm. When did it finally confirm? When it broke those highs. And then it actually broke out again. Starting to get it. Any other questions so far? Ash broke out. Consolidation, box, rectangle, whatever you want to call it. A highly tradable, high probability edge based on historical patterns and precedents. 11/7/14. You take a look at it on the daily chart. You could have taken it at the same time, breakout, or you could have waited for this breakout. Or guess what? This breakout. A weekly breakout in a trend can go and give multiple opportunities. In fact, it's on my watch list now. Our watch list to do what? What do you think we're waiting on Ash to do right now? Break out again. Look at the long box here. Break higher. Not there yet. Okay. All right. Here, let me give you. I've got some other examples, but we don't have an awful lot of time left. Let me give you some current ones and see if you can see what it is that we're looking at. Take a look at MLM. What's MLM? If you just take a look at the price action, I don't need any indicators. I don't need anything. What's MLM doing on the weekly chart? What's it doing? Breaking out. I think I even mentioned this one on Stock Twits yesterday. Look at what it did in this box. I just mentioned that oftentimes a stock will break out on that weekly. It might be extended on the daily, and you want it to rest first, and oftentimes it will come back and do what? Test the weekly chart breakout. Well, what did it do? After testing, what did it do this week? Broke out. Now, doesn't mean it's going to work. I have no idea, but I'm certainly if my edge shows up, I'm going to trade it. Okay, so we've got our loss lines in place, and if it starts running, we're going to let it run. Look at what it did. It did it at the same time that we broke out on the weekly, we broke out on the daily. See that? Look at that long box. All right, what about Taser? Notice Taser developed a box back here. I've mentioned this one on Stock Twits too. Formed a box. It ran, rested. In this case, formed a box. Didn't just pull back. Formed a big old box. You got your trend, clearly defined trend now on that pullback within that box. Actually came back and did what on that weekly chart at 27.73. And you can see it here on the daily. Look at this. Here's what was resistance has now become what? Support. And we've also got a trend on what? Daily chart. Breakout on the weekly, came back and tested. Formed a box, sideways rest on the daily, broke out. Taser. Okay. Here's a few on our watch list, and here's why. GT. Look at GT on the weekly. What's GT doing on the weekly? Is it breaking out or is it in a box? Now, it depends on your age, whether you want to use wicks, but because it's hit on this, and what I do is I look for whether it's had several wicks at a certain price or several candlestick closings. Okay, that's right, John, it's a box. So here's your box. You can move it up here if you want to. Again, the support down here doesn't matter. What matters is the resistance, because we're near the resistance. Okay, has it been trending higher or lower? I like to use red for resistance, green for support. Trending higher or lower? Higher. So what are we waiting on it to do? We're waiting on it to give us a potential trade on the daily chart. I believe they had earnings, so I like to see it gap up. I'd like to see it continue. Look at the top of this wick. So what I'm looking for, and this is the art of the chart, I'm looking for it to do what? Now, see, we may develop boxes on our chart, but we might have a little, and it breaks, but we might have a little bit more resistance first that we might want to watch on the higher time frame. You see, and I consider this resistance a very important area of resistance, because the last time it hit 28.96 or 29 area, it did what? Failed. Well, if it breaks through this area, that means those sellers are gone and the buyers are taking over. I'm looking for GT to break out, continue the trend. It may not happen, but that's what I'm watching for. CSX. What's CSX doing on the weekly chart? Now, this is what I was talking about, where we're looking for a trade to break out on both the daily and the weekly at the same time. And in order, in this case, for it to do that, because we've had such a big move on that daily chart right up to the resistance, we want it to rest first before it breaks out. Well, look at what it's done. It's formed a what? A pullback or a flag or whatever you want to call it. So now we're waiting on it. Now that it's resting right below that breakout and it's not extended, we're waiting on it to break out of that daily chart, which will also confirm a breakout on the weekly. Now it may happen this week. It may chomp around here and go sideways a while and then break. It may never give us a trade, but that's part of the patience. That's part of having a process. That's part of waiting on it to set up and knowing what your setup is and having the confidence to trade it. Long-term trend. How about eBay? eBay broke out here in 2012 and ran and ran and ran and ran. There would have been multiple opportunities on the daily chart to trade that. But look at what it's been doing since. Nothing. It tried to break out back here at the beginning of 2014 and failed. They don't all work. But look at what it's doing now. Trending higher, developed a box. And now what are we waiting on? And here's where it rested and broke out but didn't last very long. But look at what it's doing now on the daily chart. It's developed its support. I'm going to be watching this resistance up here. I want to watch and see if we break out on that daily and that weekly chart. All right, how about CBG? I think I mentioned this one earlier. And then we'll look at Netflix and a couple of others. And if you got any questions, I'll answer them. Look at what CBG did. And this is part of the patience and waiting on a setup. Excuse me. Trending higher, broke out of a box. Okay. Now, I believe they had earnings. I believe this was earnings. Here was a breakout. Came back down. Broke out again on that big candle. But, a big candle like that, I usually, looking at the personality of the stock, if that's unusual, I'll usually wait and see if it can form a box. It tried to break out a couple days ago, but didn't last. Look at what we're doing on CBG. Waiting on it. May never break out, but the longer it goes sideways, the bigger breakout you normally have, and the longer it will run. And oftentimes it will run the distance that it ran the last time, from the bottom to the top. All right. Let's look at CE. Then we'll look at Netflix. What's CE trying to do? Do you see where CE broke out of a box? But look at how extended that is. I'm either looking for it to gap and run or rest and run. See, it's broken out on the weekly. That was trade number 2 we discussed right at the beginning, the pattern number 2. It breaks out, but it's extended on the daily. Then we wait for the daily to form its own box and then break out to confirm the weekly. Look at CE. What's it doing? Possibly setting up to do what? It's testing the breakout on the weekly. All right, Netflix. Netflix had a huge breakout. If you traded the continued run, we didn't talk about it here. It's just we already had a big run up, gap up, then another gap up. Breaking out here on the weekly. I'm just one. I just don't feel like chasing a stock. If it keeps going, okay, it goes without me. There's thousands of stocks that do stuff without me every day. So what? Get over it. I got to tell myself that ego thing. Otherwise, I'm going to wait on it to go sideways and possibly set up again. That's what I'm waiting on Netflix. So that's what we do. We develop a process. We develop variables in our edge. We know that historically this edge can make money. We develop, where we're going to get out if we're wrong. For me, if a stock breaks out, the breakout line is a great place. If you're going to trade the breakout and it falls back down below the breakout line, then that tells you that it's failing. You say, well, what if it stops going down and breaks back higher again? You never know. There's a random distribution. What if it keeps on going down, 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 down? And instead of losing 10%, you lose 50%. You see, there's going to be times where you get into a trade and you get out, then it starts working without you. Sometimes it sets up again, you can always trade it again. That's just the way it is. Sometimes you're going to get out of trades too early. Sometimes you're going to wait too long. It's all a process. It's all random distribution. It's all accepting whatever the outcome is based on your process. Any questions? Any questions? Before we go, we've been on 56 minutes, and everyone that came on stayed on today. I kept your attention. That's awesome. Thank you. Yes, it is recorded, and I will send out a link via Twitter and StockTwits for you to be able to review it as often as you like. If anyone's interested in any of the programs that I offer or want to reach out to me with any questions, please reach out to me. I don't do courses very often. Got one coming up. Love to have you join us. Okay. What do you think? When breakout is testing previously, follow through breakout or potential rollover back into the box. Michael, what do I look for when it comes back and tests the box? I look for a new breakout on the daily, if that makes sense. Kind of like with Netflix. It's not going back to test the breakout, but if it breaks out on the weekly, comes back and tests the weekly breakout, it forms a box on the daily, right? Gives you a resistance area and a support area, that previous breakout level, right? So then we're looking for it to break out again on the daily chart. That's a way to do that. Very good question. Thank you. Yes, it will be recorded. Yes, you can do these patterns intraday. Oh yes, they apply to indices. You can trade. We talk about trading SPY. We talk about trading. Right now it's in a box. We've been talking about choppiness. We're in a long box. Been trending a long time. But yes, they apply. The price patterns apply to anything. You can trade oil with it. You can trade gold with it. You can trade SPY. You can trade. One of the I've developed all my stuff in TradeStation, but we've got we watch these indices and futures to get general market sentiment. Then we have the majors, as I call them, and then we have the sector ETFs that we watch. Because many people, instead of trading individual stocks, would prefer to trade ETFs. We may even hear talk about several retail stocks that are breaking out in trends. And instead of trading an individual retail stock, why not just trade the ETF XRT? It just depends on, we had a breakout back here at the middle of March. Okay, we had a run, pullback, run. And so you can see the same breakout happen back in October, on that weekly chart. We had a nice run here, pull back, ran again, pull back with a box here, ran again, pull back here, ran again. Very good. Any other questions? Yes. You will have failures. That's why you have loss lines. You will have TSEM. We're sitting here waiting on this thing to break out of a box back here. It was in our watch list. It never broke out of that box along the rising trend on that weekly chart. Instead, what did it do? Failed. We remove those out of the watch list. Oh yes, oh yes, we trade the short side. All you got to do is look at. But the thing is, we just haven't had that many. Because of the market. Here was, if you recall, XOP oil down, pull back on the weekly, down back there in October. You see it right here. You see the breakdown here. You got trends and breakdowns. You trade it the same way. And like I tell people, you just turn your computer monitor upside down and pretend you're trading long when you're really trading short. And what I do is I buy puts instead of calls. All right, enjoyed this time together. It's been an hour, and if you got any questions, please reach out to me, and this will be recorded, and you can watch it at any time you want. Thank you very much. Have a wonderful weekend.